Hi, welcome to Cryptonomy. My name is Mo, and I'm a computer and data scientist. I've been a crypto investor for the past 6 years. I was able to turn a small, humble portfolio into 6 figures this cycle. So if you want to learn about my strategies and the way I think about and speculate in the market, and learn some of my mistakes as well, do watch this video. And if you enjoyed, please like and subscribe. Today, what we're going to be discussing is the volume. I personally believe that volume precedes price. So there are many lagging indicators, but volume is one of the few that actually precede and tell you about where the price could be going. Of course, nothing said in this video is financial advice. It is for educational purposes only. I only try make my best guess from data I see, and I bet on the speculation that I come up with. I try to keep my analysis probabilistic and logical, and I always set targets for myself and stuff like that. So yeah, I personally believe that volume precedes price, and therefore I study it a lot in determining short-term bounds and best places to buy or sell and stuff like that. So this is, for example, what we're going to be discussing is our 3 types of volumes today. This one specifically is the volume footprint. It explains a lot. It gives a lot of data. While price tells the direction, I think the volume footprint tells you the story. And therefore, I think it's essential to discuss it. And then we're going to look at the volume candles on the 5-day chart, which look like that. It's a mixture between volume and direction, so you get a complete, actually, picture of what is happening, right? And the third one, we're going to just go with good old, just volume bars, right? First, I would like to start with that one, and maybe we will also discuss, if we have time, about the liquidity to paint out a full picture of the puzzle, right? On the weekly, what we can see is actually the selling volume is dominating right now, which may indicate that we may be on the long, medium term, be having lower for longer, even if we get a bounce. To me, larger selling volume just says there are more sellers in the market than buyers, and therefore the price might be going down. For example, if you look at times of bullishness, you see that the buying volume is actually larger than the red volume, right? And similar to here, and if you can go as far as, there and there. But bear markets are usually characterized with larger selling volume from here relative to the buying volume around it, right? And there as well, and here. But sometimes volume spikes can indicate reversals as well. That's usually when the time is right, but right now the time is not right for a reversal, especially on the medium long term, and therefore we should interpret it in terms of leaning towards lower for longer, right? But however, something interesting comes up when you zoom into the 5-day, right? We're seeing some more greenness over here, but then the 3-day, you're seeing maybe equalization, and the 1-day, of course, the red is mostly dominating, but right here, the bulls are showing their faces again, and especially if you go on the 6 hours, that's when it gets very, very interesting, right? If you, for example, looked at the 6 hours and you watched that big green candle, you would have actually predicted the short-term relief rally. On this channel, we're actually mentioned that several times, along with bouncing off the 100-week SMA, and therefore it was a smart bet to say we would see a short-term reversal relief rally, right? Not sure where it can go, but my best guess is maybe 100 or just below at 97, something like that. I think this will be a very major level to watch for. That can be hard to break in, but if we break that, I do expect to even go higher than that, right? Right now, this is the level I'm looking at, and we were able to anticipate the rise in price, this Bitcoin relief rally, just by simply looking at the volume on the 6 hours. On the 4 hours, it's even more clear that the bulls are relatively dominating the bears over this period, right? And therefore, be careful on how you trade this market, because it is getting a little bit tricky, right? The second thing that I like to look at is actually the 5-day of the volume candles. And why I like this indicator a lot is because it merges both the volume and price together, so we can just delete that and get a more complete image of what is happening. We get a similar thing. We're seeing the red is dominating the playground, right? The bulls just have no chance. That's why I believe we might, even when the bears dominate, you do get short relief rallies like that. And here, as you can see, we might be getting that. And what's interesting is in bear markets, you usually notice that in the leg down, you have larger volume than the leg up. And therefore, this indicator was very helpful for us in determining that the bear market may have started and the bulls are going to get it. And we were able to determine that way back here, right? Way back here. So we've spoken of, I've personally sold all my long position right here after this major rally, and then not rally, fake rally, right? I personally did get tricked and invested a little bit here, but when I saw this candle right there, I was like, oh, nope. And this also wasn't convincing enough. The red was dominating, and therefore I just exited my position. And that was a good play, right? And here we saw similar things play out from the volume as we spoke and the 100-week SMA. So far, the market has been on our side, and let's hope it does stay that way. In bull markets, or like in next leg ups, what do you see is green candles actually dominating the leg up is dominating the leg down in terms of volume. And that's how we can expect another major rally. Similar here, similar situation, here, similar situation, here as well. If you looked at that and saw that, you would be like, yeah, we're up higher. You saw that and you compared it to that, you probably guessed the next move, right? It's pretty interesting what volume can say a lot about price, except in this area where this was definitely larger than that. But here you did get another two. But remember as well, time is very important. In terms of reversals, it's important to not only take an action, but also understand the time of the cycle and what works out in some cycles doesn't work out in other cycles, right? November, December of the third, the bear market year is usually the time of the reversal. We've analyzed that in a different video as well. What we see now here is very similar to what we saw in the previous cycle, right? So the first leg had larger green volume than selling volume, and then in the second leg we saw smaller buying volume and larger selling volume, right? And you can see it here. Here we got larger buying volume, smaller relatively selling volume, also not that small. It was more of equalized, but this why maybe we had another leg up. And especially where you could have guessed that the top was in is if you looked at that and looked at that and you were like, yeah, the red is definitely dominating the green in this zone. And that would have been one of your guesses in support of the argument of the start of the bear market, alongside that usual peaks happen around the post-halving year or post-election year, sorry, in around October, December, September, right? That would have been a signal along with the cycle time that we get usually topped in, November, December of that year. You would have had a good, right? Similar to the situation. Another thing I would like to discuss before we end the video is I usually like to look at the volume footprint when it is on the monthly, especially. Even though this monthly here doesn't say a lot for us. So we're going to go to the weekly, right? What we notice in the weekly is that right here, we did get a relatively large volume, right? But the delta was minus 2,000, right? Here you got third of the volume, 11,000, but the same delta. Okay, we got, the drawing doesn't work. We got the same delta for half the volume. So the strength of this delta is much larger than this delta. And what the delta says is you take the total buy and you minus it from the total sell. And that's how you get the delta. You take the total buy and you plus it with the total sell, of course, the positive value of the total sell, just addition, you get the total volume that was traded that day. And each of these boxes show the delta at each price level. This one shows the total delta of the whole price block, right? And therefore you can really understand the story of what is happening. For example, here you can see there's a lot of selling at the top, but buyers are starting to step in at the bottom to buy at cheaper prices, which is usually a good sign, right? If you get decreasing selling volume and deltas at the bottom, that's a good sign for reversal. And this can be confirmed with the next candle actually showing a positive delta, a majorly positive delta, with large volume and good green structure. This is why I do believe that we're going up to at least bounce off the 50-week SMA, and I think we're gonna go to at least, I think we're gonna retest and fail the test of the 50-week SMA. So if we go look at maybe the 3-day like that, what I would see is bounce off here and then reject here and go lower, right? And this happens every cycle, so it is interesting to see that. For example, if we go on the weekly, if we wait for it to load, we saw something very similar last cycle. We've spoken about this in another video. It's called Bitcoin moving averages or something. Do watch it if you're interested in this. You get a bounce here of the 50-week SMA, and then you retest. You test the 100-week SMA. You test the 50-week SMA as resistance, and then you break below, right? And once you break below the 100-week SMA, you usually get the largest crash of the market, and that usually between 47 to 58%. So moving averages can also tell us a lot. If you go see, we had a very similar structure here. We bounced off the 50-week SMA. We didn't actually test the 100-week SMA, but we broke below it. That's when we also got like a 50 or 50 something %. We test the 50-week SMA, and then we break down at some point later, right? And we also saw it last cycle, right? Here, bounce, breakdown, test, but here we did not retest it. We tested the bottom, right? And then we broke down. So sometimes we test the top, sometimes we test the bottom, sometimes we test both the 50 and 100-week SMA. Here, because the 50-week SMA is not that far off, right? I do not see why is it not possible to actually just go 12% from here and just test the 50-week SMA. And a 50% drop from here would actually take you to, from the 100-week SMA, as we've seen back in history, would give us to around 40K, right? 40K. But I do not think we're going to break it now. Usually that happens late in bear market cycles, usually around for example, 2 cycles ago that happened in May, so around here. But the previous cycles we've seen it happen even in I think September or something around here, right? So I think we're just going to consolidate around this area and maybe break before May or on May. I do not think we're going to consolidate for that whole period, right? And that's because we maybe topped earlier. We're going to maybe break earlier than here. That was, I think, believe the second cycle, and the first and third cycle happened here, right? If we can maybe just give you an idea, go analyze it very quickly, and we will end this video. Yeah, this one happened, yeah, May. Oh, that's the last cycle happened in May. Here it happened in November. Here it happened in December, right? Oops. So I think, oh, well, let's just look at the liquidity heat map, and we will also finish it so we get a complete picture. On the 2-week, we're actually seeing some liquidity on top, and that liquidity ends around, you know, the 100K level, 101 and 102, which aligns with our prediction that the 50-week SMA might be retested, right, as resistant. And liquidity usually acts as a magnet. So if you think of price as the equation, you know, the thing we're trying to find, then there are many variables that affect the equation and to get the price. And I think liquidity acts as one of those variables. It acts as a magnet. The more liquidity up, the stronger the magnet, and the more liquidity down, the stronger the magnet, right? But the majority of the market participants have to be wrong, and therefore it is a safe assumption to do that. Of course, nobody knows. We're all just speculators at best here. Everyone is guessing. Please do your own research if you consider taking any of this advice. But I hope you learned something today, and I'll be seeing you in the next video.